We've made a lot of videos about NVIDIA lately. It's incredible what is happening. Generative AI could be changing things in fundamental ways that we haven't seen since the creation of the internet. I know that sounds like a lot of hyperbole, but there's a really good chance when we look back in 5, certainly in 10, absolutely 20 years from now, the impact of generative AI and eventually artificial general intelligence is going to have moved the world forward in a lot of really positive ways and some ways that might seem scary right now that I think are going to benefit humanity. NVIDIA investors have benefited more than any investors in the world as that stock has absolutely skyrocketed from really building a bigger, more powerful, more profitable business. It's become one of the most valuable companies in the world and keeps pushing itself into competition for the most valuable company in the world against Microsoft. Now, Microsoft, as we know, is one of the other companies that could be a massive winner from AI. Big investments in AI, both for its cloud customers to build AI products of their own, but also for its own enterprise tools that it builds, incorporating AI into them probably faster than any other company on the planet, looking to turn generative AI into real money on the other side of these big investments. However, investors that think NVIDIA stock can only go up from here need to learn a really big, really important lesson. And it's a 17-year lesson that we can learn from no other company than Microsoft. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, we've got a great opportunity for you. Go to our special link. You see it on the screen, fool.com/unscripted. Go to that link. The Motley Fool, it's 10 best stocks to buy right now. It's a great offer for one of their flagship services. You absolutely should check it out. It's a good opportunity for you to boost your own investing returns. Just a real quick look here. NVIDIA stock just this year, basically 6.5 months in, is up 155%. Now, we really start stretching that out and we see life-changing results, 26,000% over the past decade. Since its IPO, 308,000%. It's a pretty remarkable run. Now, I've done other videos on here where I've highlighted where I think investors looking to profit from NVIDIA should continue to look forward. Talked about the growth of AI spending. Lisa Su at AMD, the CEO there, has talked about how they think AMD is a big competitor for NVIDIA, thinks that the demand for AI chips, where AMD is also trying to compete, could be several $100 billion a year in just a few years, where compared to where it is now, that is like a 4x in size. So there's still a lot of potential for this to continue to grow. And NVIDIA has proven itself to be a leader here, right? So we've talked about that upside, talking about thinking long term. However, I really want to highlight some of the risk and really paint a better picture for investors who think NVIDIA stock is probably only going to go up from here, to avoid taking on massive risk that could result in giant losses. The company I want to talk about is kind of the textbook case of that is none other than the company that NVIDIA is vying for largest market cap in the world right now, and that's Microsoft. So you think about Microsoft, the company's evolution from during the 80s and 90s is that Wintel duopoly. It was Intel powered computer running Windows that everybody had. That was it, whether it was on your office, whether it was in your home. That's what everything ran on. The servers were all running, that powered the internet were all running Intel chips with Windows Server operating system. So that was just the standard that ran the entire technological world. Now, of course, we've moved more to mobile computing. So many things have moved away from the desktop to the cloud now, right? Companies want to kind of push that infrastructure into the cloud where it's more scalable. Microsoft, of course, evolved with that to be one of the largest cloud providers, and their software is so critical to the enterprise even today as we've moved from less of those desktop machines. Microsoft's enterprise software runs the world. David Gardner, one of the Motley Fool founders, has a famous for the snap test. You snap your finger and the business disappeared. How would the world be affected? And certainly Microsoft is one of a handful of companies that the world would be absolutely upended for an extended period of time if you snap your finger and Microsoft didn't exist. It's been a huge winner for investors. However, it's easy to miss. Sometimes revisionist history, we forget Hasn't always been the case. Let's lay out the 17-year lesson from Microsoft that investors should be really, really aware of before they just invest in Nvidia, maybe risk money they can't afford to lose on the idea that the business is this, on the idea that the stock is just going to continue to move higher. Okay, so what are we looking at right here? This is a brutally painful period in the history of Microsoft stock. So we go back to the late 1990s, the dot-com boom. Everything that was related to the internet and software and technology absolutely boomed and skyrocketed. And Microsoft, right there amongst those, was back then one of the most valuable companies in the world. From the stock peak, December 27th, 1999, it would take 17 years 17 years for the stock to fully recover and consistently stay back above that high in 1999. That's right. It was late in 2016 before the stock fully recovered all of its lost value. And of course, since then, it's continued to march higher and has generated wonderful long-term returns. Now, here's the thing. I know what you're thinking, and it makes sense because I'm thinking it too. Well, Microsoft, like so many tech stocks back then, were insanely overvalued. And yeah, you can look at Nvidia and say it trades for over 70 times trailing earnings. That's also very high. But then you factor in the growth rates, the likely growth rates that it's going to see just over the next year or two. And all of a sudden you see a price to earnings multiple that's closer to the high to mid 30s, right? Because they're expected to double their earnings over the next year or so. And all of a sudden, maybe it's not so expensive, right? So that's true. That's absolutely true. But I'm going to go back to that chart that I showed you with Microsoft, and I'm going to lay some things over the top of the stock price that I think are so fundamental to understanding where there's still risk with Nvidia stock. So again, here we go. Back to that massive, massive drop. I'm going to change one little thing on this here just to show you how much the stock really plummeted. Again, this is Microsoft's stock. It spent the majority of that time down more than half. And then during the global financial crisis, it fell 75% from that high. So we're not talking about just a little decline, a massive decline. And you know what happened along here? Most investors sold. Let's be honest. Most retail investors, they sold their Microsoft stock. They didn't continue to hold. They moved on. They locked in those losses at 50% or more and moved on to other investments, hopefully doing better, learning the lesson that we're talking about now that could be the potential risk for Nvidia. So anyway, that's how much the stock fell for most of that time. But how did the business do? All we've talked about so far is the stock. Well, let's put revenue on here. That's right. Revenue increased 4x, 324%. That's a fourfold increase in revenue, plus another 24% in revenue growth over that period. It's pretty remarkable what happened. What about net income? Net income was up 143%, more than doubled over that period as well. There's even more. There's even one more thing I think is really important. Shares outstanding. Shares outstanding decreased 25%. The company repurchased 25% of its stock over that period. So earnings per share, let's take a look at earnings per share. What happened with earnings per share over that period? Earnings per share up 180%, 177% over that period of time. So what's the story? A business can continue to improve and the stock price can fall. That's really important to remember. The big lesson I want to leave for investors right here is, yes, Nvidia is an incredible company. It's one of my largest investments. Now, it's not a massive part of my portfolio, so I don't have any plans to sell any of my Nvidia right now. I do think, looking back 10 years from now, I think Nvidia is going to continue to gain in value, but there is always that risk that the AI story we're talking about doesn't pan out like we think it's going to, like the projections are. That's exactly what happened with Microsoft and so many other companies that were exposed to the internet business during the dot-com boom when their stocks shot up. And then the business results didn't exactly materialize how investors thought. Stock prices went down and it took a massive, long period of time to fully recover, even though the businesses continued to sell more of their product, grow their earnings, and even buy back share and increase earnings per share even more. Investors have to be hyper conscious of that with Nvidia just to avoid making that mistake. Big takeaway for me, I hope it is for many of you as well. Make sure you're not too exposed trying to catch lightning in a bottle for some opportunity for big gains because you think it's a can't miss investment and risk money that you really can't afford to lose because it could take you a lot longer to recoup those losses than you ever expected that it could.